Welcome to How to Stop Losing Money Unnecessarily in Your Trading, the top 5 psychological mistakes traders make and how to fix them. This is brought to you by Brian McAboy of InsideOutTrading.com. That would be me. And what to expect today. This is going to be a little bit different. This is not your typical, we're going to be talking about systems and, indicators kind of webinar. Plus, I also don't have a sales pitch for you. We're going to start off with just getting acquainted, so to speak. We'll talk about the problems, the psychological mistakes the traders make. We're going to talk about the mindset of a winning trader, and we'll do a quick recap. And at the end, I do have a gift for you. But again, there's no pitch on this webinar. I figure, we've got 45 minutes, and I want to make sure that I'm giving you the best that I can with a gift at the end. Of course, you'll also be able to, get my contact information, and if you want to, learn other stuff that I have and provide for traders, you're more than welcome to come by my site. So anyway, let's go ahead and get underway. So who am I anyway? Well, I started my trading career back in 2004, so I've been around a while. Have been able to observe and participate in the evolution of the trading sphere over the last several years, which has been really interesting. When I first started trading, the majority of people still traded through their brokers via phone call, and traders on the trading floor were still doing placing most of the actual trades. And nowadays, of course, most of it is, or nearly all of it, is done electronically, and people are doing it direct. Very little trading is done through brokers, so people brokers. So anyway, and for the last 11 years, I've been helping traders with a variety of issues, everything from psychological stuff to functional things, getting your system fixed, getting organized. And for over 20 years, I've been in quality assurance, which, as we go through this, you're going to see how that is absolutely pertinent and very helpful for you as a trader. Now, I also went to the University of Kansas, got my mechanical engineering degree there, and part of the reason I bring up KU is, this is, again, directly pertinent to psychology. After I graduated, Roy Williams came in as the basketball coach. I don't know if you follow college basketball or not, but at KU, it's a big deal. And Roy Williams was a coach who came from North Carolina, where they had a huge dynasty, and Roy Williams established one of his own at KU. And he was a great coach, a great recruiter, had KU in the top 10 every year. Most years they were going to the Final Four. But in his 12 years at KU, Roy was never able to come home with a championship ring. And the reason was, and it just drove me up the wall. I mean, he would recruit All-American teams. I remember one year early on in his career at KU, going into the championship game for the national championship against Maryland. KU was 34-1, had a fantastic team, had just been crushing everybody all year long. And they get into the championship game, and Maryland also had a very formidable team, just really excellent. But in the first 5 minutes, KU was just killing them. I mean, it's 5 minutes or so have gone by, and it's like a 20-point lead. And everybody, the announcers, the audience, me, everybody's sitting there going, I mean, what the heck? This is supposed to be a championship game. It's not supposed to be such a lopsided game. And so there were a few timeouts, and the Maryland coach, he regrouped his guys, and over the course of the game, Maryland came back, and they came back to win. And the thing that killed me about Roy Williams, like I said, he could coach, and he could recruit, and he could train. I mean, he put fantastic teams on the floor. But when they got to the championship game, to the tournament, and all that kind of stuff, somebody would always throw them out of their game mentally, and that's why he never got the ring. And that was a really big deal. They had the talent, they had the coaching, but they would get thrown off their game mentally, and they would get beat by teams that had no business beating them. So, all right, let's go ahead and get underway. The topic today is, of course, the psychological mistakes that traders make. Now, the thing is, trading is a mental profession. Most professions, including sports, are largely mental, but trading, it's almost entirely mental. I mean, if you think about it, it's almost entirely a decision-making activity. We're taking in information, we're evaluating, getting at certain criteria, making decisions based on that evaluation, and then taking action on those decisions. But it's almost all a mental activity, very little physical stuff going on. So if what's going on in your head and making sure everything is working right, It's obviously critical. If you're off mentally, it will affect your results, just like in any other performance activity. Now, sometimes it's just a small scale effect, like if you hesitate to get in on a trade when you're supposed to. Sometimes it can be just limited to a certain specific trade. Other things are big impact matters, and that's what we're going to be looking at today, are the big impact stuff that really has far-reaching effect on your trading. Now, so is this for you? Well, if you're a hands-on trader, if you're actively involved in your trading, then this is for you. If you're running strictly bots or algorithmic trading and the computer's doing it all for you, well, then maybe this isn't for you unless just out of curiosity. If you've been trading for more than 3 months, I know 3 months may not seem long if you've been at this for a few years, but really 3 months is really all the longer it takes for you to start really getting the experience of being a trader. So if you've been at it for more than 3 months, and if your confidence is less than an 8, now this is kind of a critical factor here. I have a lot of people when they come to me, I'll ask them up front, what's your goal with this coaching? And the answer that I used to expect years ago was, I want to get making some money. But what I've been really pleasantly surprised with, and I've come to get used to, is most people will say, Brian, I just want to have confidence in what I'm doing. I mean, I've been at it for a long time, and my confidence has just been beaten down, and I want to get my confidence back. So if like I said, if you've been at this for a while, your confidence is less than an 8 on a scale of 10, then yeah, you're in the right place. If you also know that you've been trying everything you can think of, it still isn't working, but you're missing something, but you just don't know what, then you're going to find this helpful today. And of course, if your trading just isn't where you want it to be, then yes, you're in the right place. You're going to find this very powerful today, very useful, even though it's all, we're talking psychology, very practical stuff as well. Again, my background is engineering. So what this says about you, the fact that you're here, is, of course, first of all, that you're serious about making your trading a success. You're not just, off goofing off, watching TV, or, fiddling around in the yard. You're here trying to learn something helpful in your trading, and that's cool. Also, the fact that you're here also says, hey, you've made it this far, you've survived. Not everybody does. Kudos. It also means that you're not a quitter. You're staying after it, and that's excellent. But also, since you're not just looking to buy another system and just keep throwing money at this, you're here to learn about something on a more personal side, the psychology side of it. That also means, yes, you are interested in developing yourself as a trader. Again, kudos, very cool. And it also means by the fact that you're here, you recognize that there's room for improvement, that things can be better, and you're wanting to pursue that. So all these things are excellent. And also, really, the fact that you're here and you're looking for improvement, looking to learn more, it says that yes, you have this success trait. So I'm glad that you're here, and I'm glad to know all these things about you. Just the fact that you're here really does indicate all these things about you, and that's cool. Okay, now what we're going to cover, we're going to talk about the top five psychological mistakes that traders make, how these mistakes impact your trading, what causes you to make these mistakes if you're making them, what to do to fix them, and we're also going to take a look at the mindset of a winner, a couple of big picture perspectives on trading, and we're going to wrap up and have a quick Q&A if we have time. If you do have any questions, I ask that you hold them to the end. I want to make sure that we can get through everything. So at the end, I also do have a gift for you. Again, I'm not selling anything on here. There's no pitch. I do have a gift for you, and I'll tell you about that at the end, and it goes right along with what we're talking about today, so you will want this. Again, it is useful, helpful information. So, and here's what I'm talking about. This is the gift. It's called it's a report called Trading Psychology's Missing Chapter, Enough to Be Dangerous, and it is so helpful because as so many traders learn, maybe you've experienced this yourself, what you don't know can and usually will hurt you in trading. So these are some of the things that I've learned along the way in helping other traders and reading and my own experiences that generally you just don't find out about. Again, that's why I call it the missing chapter. So now I'm paying attention. This is where I'm supposed to say, turn everything off. I'm going to be talking so fast, and you want to take notes and all that kind of stuff. Well, here's the thing. I know that if this is important, you're going to pay attention. It's simple as that. If it is a priority, you won't be on your Facebook. You won't be doing all those other things. And of course, if I'm not boring you to tears, so long as I do hold your interest, then you're going to pay attention. So now I know your trading is a priority. So even if we do run across something where you've heard it before, we do have several matters to cover So make sure that, yes, you are paying attention as we go along. I mean, we got 5 different mistakes. If one out of, 1 or 2 out of the 5, you've heard of before or whatever, the main thing is go ahead and pay attention, because if you're making even one of these mistakes, it can be hurting you, and so you don't want to miss it. Anyway, let's get started. Psychological mistake number 1, and this is where most traders at the very beginning of their career really get in trouble. Now, I mean, about traders in general, what I've learned over the years, and I'm not the only one, there's plenty of evidence to support it, traders in general are above average, higher than average IQs, generally financially, success-wise. In many regards, traders are above average as for the group as a whole. I mean, you wouldn't be in a position to trade if, if that wasn't true. Now, what gets a lot of traders in trouble is the apparent simplicity of trading. The fact that you are smarter than average. Somebody explains trading to you, you look at it, oh, I can do that. And so it's real easy to make the assumption that, hey, yeah, I get it. I know what to do. Yeah. Now, I just jump into it. I'm good to go. And, I can kind of learn as I'm going. And of course, there are others in this sphere that are incentivized to prompt you along to get busy with the trading. I mean, brokers are probably the worst about it. And that's not that they're really necessarily doing anything unethical. Brokers they get paid. The individual brokers, they get paid by getting you in and getting you trading. I mean, that's how they make their money. So their personal incentive to get you in and get you busy. There are others who are incentivized to prompt you along, and there isn't hardly anybody who's incentivized personally to say, hey, you, wait a minute, slow down, attend to this properly. Most everybody that's in the sphere is saying, hey, no, it's so easy, come on, let's get rich quick. And so they have reason to prompt you toward the get rich quick thinking. And all it does is really hurt you. The result of all that, though, is you get off to this horrible start. I mean, there are many bad things that get established for so many traders in their early days of trading. It's dreadful. I mean, first of all, most traders, you get contacted by a broker, or you say commercial or whatever, and you find out about the little bit of information, you see the opportunity that's there for really good returns. It's like, okay, cool, and all right, so you sign up with the broker, they say, yeah, let's throw you in the trading room over here so you can watch them and see how easy it is, and of course everybody's all excited and they want to get you going with your trading real quick and get you busy actively. But almost every trader I know, they get started before they're really properly prepared. And so you start off practicing bad trading, practicing emotional trading, practicing trading when you really are still trying to learn. There's a whole lot of things you still don't know. And you're practicing trading that way. And you get a whole bunch of emotional responses that are embedded and established. You get perspectives, habits and routines, and a whole slew of stuff that's just horrible as far as profitable trading. And so that's the first psychological mistake is just looking at it and saying, oh, I can do that, and acting on that false confidence. Again, being smarter than average, you look at it, looks, hey, easy enough, buy low, sell high, got it. And you jump into it and get busy. That's the first psychological mistake. Now, this book right here really illustrates what a lot of traders run into, I've found. When I made the connection years ago, I absolutely love it. I've shared this with thousands of people, literally. You've heard of the Peter Principle. This was written back in '68, and Lawrence Peter was commissioned to find out why in American business there were so many bad decisions being made, why so much just mismanagement, things were going wrong. I mean, hence the title of the book, the Peter Principle, why things always go wrong. And the summary of and what everybody's come to know as the Peter Principle is, in a hierarchy, every employee tends to rise to his level of incompetence and then remain there. And the story goes that you've got this employee Bob, who he starts off with an entry-level position, and he's working hard, he's doing great. So the management looks at him, hey, Bob's doing a good job, let's promote him. So they promote him, and he stays after in the next job, and he's doing great. Bob's doing a great job, let's promote him. And so they keep promoting him until he runs into a job where now, hey, Bob, he's not doing so good anymore. He's struggling along, so and now he gets passed over for promotions, and he remains at that level where he's struggling, and that's the whole thing. Now, what doesn't get published nearly as well as the Peter Principle is the follow-up thought, and Dr. Peter even said this. He said it's not so much that the person is incompetent, they simply lack the skills for that particular job. And in the PETA prescription, he talks about the solution to it, where instead of promoting somebody based on their past performance and excellence, it's important that you give the person an assessment to see how they have their current skill set and attributes line up with the new position for which they're being considered. And if they don't match up well, if their skill set, if they're missing skill sets, to train them before you promote them into the position. Excellent. It sounds all very straightforward, but back then and for many years, this was a big problem. Well, so what does this have to do with trading? Well, no matter what you were doing before trading, but you were doing something else. And when you chose to become a trader, you essentially kind of promoted yourself into the position of trader and all the other positions that go with having your own trading operation, because you're not just a trader. You're wearing all the hats. And so now, again, you've promoted yourself into all these other positions, and there may be some that you haven't had the proper training and past experience for. Most people who get into trading have not traded before. They decide to go out on their own as an independent trader. So again, this is absolutely applicable. Okay. Now, what I've discovered over the years, and I've found this to be absolutely true, if you take a person of reasonable intelligence and you throw them into a challenging job like trading, for which they are not prepared, they're not bringing transferable skill set, and they've not had the training, it will be stressful, it will be filled with mistakes, and it's almost impossible for it not to be an emotional experience. But if you take that same person and you give them proper and adequate training for all of the skills needed for that job, they don't have psychological issues. They just go do their thing. And I found this to be absolutely true in trading. When I was in quality assurance, same thing in business consulting, I found that this holds absolutely true, especially with above average people. Okay, now, psychological mistake number 2. I mean, you're going to see that these are all interrelated, even though they are separate and individual mistakes. What I need to fix is me. I have lots of people that come to me and they say, Brian, I've been trading for a while. I understand how it works. I know what I need to do. I just can't seem to do what I know I'm supposed to do. What I need to fix is me. I just got to get out of my own way. Now, in one regard, if you're thinking this, you're right. Something does need to change, obviously, because it's not working. But here's the thing. If you're sitting there thinking, hey, I've got discipline problems or I have some psychological issues, no, in that regard, you're wrong. You're okay as a person, and here's proof. Like I said before, just the fact that you're in a position to trade is proof that you have what it takes to be a successful trader. You've already demonstrated that you're okay with money. Otherwise, you would not have accumulated the capital to become a trader. You're obviously okay with discipline. You don't get this far without it. You're not an unruly and just undisciplined person. You have been able to discipline yourself well enough to get yourself in a position to trade. You're obviously okay sufficiently with being successful. Again, just the fact that you're here is proof that personally you have what it takes to make it as a trader. But here's the thing. On the flip side, when you say what I need to fix is me, yes, personally, no. As a trader, yes, and you're missing something and you feel it and you know it. But here's where this is a psychological mistake. So long as you think it's a personal issue, where you're sitting there saying, oh, I've got all these mommy-daddy issues, I got money relationship issues, or whatever, and that you think it's a personal problem, well, that's where you're going to look. And you're really going to miss that the real problem is somewhere else. And that's the big problem. By looking at it incorrectly, you're looking at it as a personal issue, not a trader issue. That's the mistake, because it's going to lead you to incorrect thinking. You're going to focus your time and energy and resources on the wrong area. Okay. What you need to do is focus on you as a trader. And we're going to get more into this. Psychological mistake number 3. And believe it or not, this is a huge mistake. Trading with real money when your confidence is anything less than an 8. Preferably, you really want it to be at a 9. And here's what I'm talking about. Again, I have a lot of people come to me and it's like, Brian, I'm trading and man, my confidence is just, crap. But I keep losing money and I'm tired of losing money. Well, here's the thing. Trading from a position of hope puts you at a huge disadvantage. If your confidence isn't there, then you're trading on hope. And mentally, psychologically, that by itself is a huge mistake. And it's not necessary. Because see, here's the thing. There's no rule that says you have to trade with real money if your confidence in what you're doing and your confidence in your system, your confidence in yourself, there's no rule that says you have to trade with real money if that's the position that you're in right now. I know, and trust me, I've been there before. I know exactly how it feels sitting there, and it's like, what, the thing is, but if I'm not trading, then I can't make any money. If I'm not, if I'm not trading for real, then I can't make any money. But the thing is, again, there's no rule that says you have to be trading with real money if your confidence in what you've got going on isn't there. You can take all the time that you want to get properly prepared. And this is the huge mistake that a lot of traders make. They think, I've got to get busy. I've got to get busy. I've got to get busy. And there's this pressure there, this internal pressure. And then it's like there's this underlying thought that if I'm not trading with real money, then there's something wrong. And I've had people that come to me and they've been losing money year after year after year after year after year. And they never, and it just blows them away when I say, take a break from the real trading. Trading with real money. It just blows some people away. They're like, well, I can't do that. I'm like, are you making any money? Well, no. Are you losing money? Yes. Well, take a break while we're going through this training to fix things. There's no point in reinforcing the negative pattern. If it's not working, stop reinforcing it. Take a break from it. If nothing else, give yourself a break from the stress. Give yourself a break from the losing money. Give yourself a break from the reinforcing the bad patterns. Allow yourself the time to get things fixed so that you can come to the whole matter from a position of confidence where, yes, you know that what you've got going on is going to work. And that's really cool. So again, this is a huge psychological mistake. People think they have to be trading with real money, or for some reason it's like it doesn't count. But you can take all the time you want. Unlike with other businesses. I mean, let's say you got a brick and mortar business. You buy a building and you put all the money into it to get it up. You take out the business loan. Then with other businesses, from the time you decide to, and you sign the paperwork, yeah, the clock's running and the costs are running. But with trading, you can take all the time you want. You can take a month, you can take 3 months, you can take 6 months, and get yourself properly prepared without losing or risking any money. You can go into the sim account and trade in the real world and get yourself all actually really ready to trade, where again, that things are working in your favor, that the odds are in your favor. Okay. The main thing is you don't want to put money out there until it's a pretty sure bet. Again, from a psychological mistake. If you're shaky and you're going on hope right now, stop. You don't have to trade with real money if it's a shaky situation, if your confidence is low or mediocre at best. Okay, I got to keep moving here. Psychological mistake number 4, and this one's huge, and I hear this from a lot of traders, especially, and again, if you've been at this for more than 3 months, it doesn't take all that long to get the game. I know all I need to know, and here's the danger in that, is that when you're thinking, I know everything that I need to know. I mean, I understand how trading works. I have a system that I know. I just need to figure out how to, stick to my system. And that's all I need to know. If that's your mindset, well, then your mind is closed to anything new. And okay, so looking at it from a different perspective, a little discussed wisdom from Warren Buffett. His whole thing, and of course, you've heard his rules and stuff, but this isn't discussed a whole lot. One of the things that has made Warren Buffett successful is he looks at a situation asking the question, what if I'm wrong? What if I'm wrong? What if this isn't going to work? And so that's absolutely one of the reasons why he's done so well compared to everybody else as traders and humans in general. They want to be right, and that's why so many people that walk into stuff and they get killed, and they lose money, and they're all disappointed and everything. It's because they're going to it wanting to be right, and their ego's in there saying, well, we want to be right. Warren Buffett's in there saying, no, I'm challenging that. Everything that I do, I'm looking at it from what if I'm wrong, what if I'm wrong, what if I'm wrong, and that's a huge deal. The main thing is, like I said, if you're looking at it and you say, I already know all I need to know, then your mind is closed and you can't take in. I mean, mentally, if that's what you're thinking, you're going to reject other information that can be helpful, what you're missing. So the main thing is, if you got a closed mind, you're going to continue doing the same things, and you stay stuck in that no progress cycle, and that sucks. Okay, here's a quick little example. I'm keeping an eye on the time because I want to make sure that we get everything covered here. when I got out of school as a mechanical engineer, I went to work in manufacturing, and we had this one guy in the plant, Mike. He was a mechanic, he was an electrical just wizard on these manufacturing machines and throughout the plant. I mean, when it came to electrical systems, this guy was the best there was, hands down. Everybody knew it, and he knew it, but he was very humble. And it was really cool. I mean, because he was the best in the plant, but he was very humble about it. Anyway, one of our other mechanics got hurt. Was on a preventive maintenance crew, and so we moved Mike over to fill in. But the work that we were needing him to do was mostly on the mechanical and hydraulic systems of the machines. And the crew supervisor was wanting to just say, here, Mike, go do this and throw him into it. Well, Mike was smart enough to say, whoa, 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 electrical stuff, I know. Yes, I am an expert over there. But hey, mechanical and hydraulics, man, I don't know squat. I'm a rank beginner. So treat me like a rank beginner. Assume that I don't know, because I don't want to get hurt. And he was absolutely smart in that. He recognized where he was strong, and he recognized his weaknesses. And he was very upfront about it with himself and everybody else. And that was cool. That was part of what made him such a great mechanic. Okay. Psychological mistake number 5. Whatever it takes. This is where most traders start off, is they have the mentality of whatever it takes. And that's excellent. But most let this wane after a while. I mean, I'll get an email about once a month from somebody saying, Brian, I'm listening to what you're saying. I love it. I'd love to sign up for your courses. I mean, it's reasonable and everything. But, man, I've just lost so much money over the years. And I've spent so much money on systems and, psychology courses and all this stuff. And I've spent so much that I don't feel right about investing anymore, and what that tells me, because I've been in that position before, and what I've learned is when I hear that, what I'm hearing is it's not about the money, it's their commitment to the whole endeavor has dropped. When they started off, it was whatever it takes, man. Yeah, and they're after it. They're on top of it. They're 100% committed. They're going to make it work. But after a while. And again, being honest with myself, when I've been in that position, it's like I know that if I'm sitting there saying, well, I don't want to do this anymore. I'm not willing to do that. What I learned to recognize is I've let my commitment to the success of the endeavor wane. I've let that drop off, and that's the problem. That's huge. And it's natural. I mean, it's pain avoidance. You don't want to keep going through the cycle of try and fail, try and fail, try and fail. That sucks, and after a while, it's like, yeah, I don't want to get hurt anymore. But here's the thing: you want to stay committed to winning, not to specific approaches. And again, with most traders, they've got the limited thinking. All I need is a system, and I stick to it, and I'm good. And so that also limits their thinking to what they have as far as options on how to make things work. And most of them default to, well, buy a new system, and next month they're buying a new system, and then the next month they're buying another system, and it's not working, but they're stuck on that approach. And so what they need to do is say, well, if buying new systems isn't working, well, then I need to stop buying new systems and figure out something else to do. I still want to, I'm going to make this work, but if buying new systems isn't working, then I'm going to stop doing that. If, going here and doing this, it's not working, then. And so it's a matter of staying motivated and staying with getting there, but you make your focus what's working and what's not working. If something's not working, then stop doing that and look for something that will work. And you want to continue the pursuit of solutions. I mean, and here's why. I mean, the greatest regret really often comes from giving up on our dreams. It's when we're after something and for a long time, and we got that fortitude and the persistence, and we stay after it, but after a while, man, we're just so beaten down, we're not really making progress anywhere. We're just kind of spinning our wheels. And for a lot of traders, and I've had a few things that this happened with me with, not with trading, but other things, where it's like, yeah, after a while, it's just, you've been stuck, and you just finally have to walk away from it, and you give up on it. Or even worse, you don't walk away from it, you just stay stuck, but you've given up. That's one of the worst things, and that's where I hear so much regret come from, is looking at, well, gosh, I wasted all that time. And that's really terrible. The main thing is you want to keep your eye on the prize. Hold on to that whatever it takes kind of mentality. It's like, yeah, man, buying a system. If that's not working, I'm going to find something else. And if that doesn't work, then I'm going to try something else. But I'm going to stay after it. I'm going to make this work, because trading is that important. If you get it working, it's a big deal in your life. And so you don't want to just stay stuck in that, treading water. It's not really hurting, but it's not really doing anything either. Okay. Now, Okay, so all these things we've been talking about, they kind of tie into the mindset of a winner. And I love the saying. I heard it just recently. I just love it because it is so pertinent to trading. Poker's not a game of chance. It is a game of skill. Same thing goes with trading. Are they both speculation? Are they both working with unknowns and a high level of uncertainty? Yes, but if you understand how it works and you acquire the skills and you develop those skills, the uncertainty becomes a non-issue, and that's what's really cool. The main thing about it is, with the mindset of a winner, you want to be tremendously risk averse. Instead of going into it hoping, the winner insists on going in a position to win. And here's what I'm talking about. There are professional poker players, and if you think about it, they go to Vegas, that's how they make their living. When they walk into a casino, when they sit down at a table, they're not sitting there going, I hope the cards are good to me today. I hope the dealer is good to me. They say, saying to themselves, I hate it when I lose money. I've had, and then talking with a client the other day, that's what he was saying. Because he asked me this question. This is where a lot of this came from and why I included it here today. He was asking me, Brian, how do winners think? And I'm like, well, here. And so this is what we're covering. But the main thing is, and I said to him, I said, Mark, whenever you say to me, oh gosh, it just kills me when I lose money, or I'm so nervous when I go into a trade. I said that kind of self-talk is a big indicator right there. And Mark's doing great. He's made a lot of progress. He's still got a little ways to go, but his confidence level, he's at about a 6 right now. He's getting real close to an 8. And he can tell that he's right around the corner. And he even started chiming in. He's like, yeah, okay, that makes sense. But he's a surgeon. And he goes, yeah, I'm not nervous at all. I'm not worried about it when I go into a surgery. Because I know I'm good. I know that I'm prepared. I know that I will do well. And so it's the same thing with trading. When you get yourself skilled up, when you know that you're trained on all that you need to know, when you're going into it and you know that you're ready, that the odds are in your favor, you know ahead of time that you're going to win, even though you're not going to win every trade, but at the end of the day, at the end of the month, yeah, you know that you're going to be all right. That's the mindset of a winner. But it doesn't happen by wishful thinking. You position yourself to go into it with that confidence. And again, like I said, as far as what the winner's thinking about what they're not. The winner, again, first of all, they start off, they say tremendously risk averse. That's where you say, well, gosh, I'm not real sure what I'm doing here. My confidence isn't up there. So the winner says, what do I need to do so that I feel that confidence? What do I need to learn? How do I need to grow? How do I need to develop? What skills do I need to acquire? What do I need to get good at so that I'm not nervous anymore? I know that I'm going in there kicking butt. And it begins with the perspectives, again, looking at the situation, recognizing the truths of it, and the self-image. Recognize, like with Mike. He knew that he was good at these other things. A rookie over here. I know tons of brokers. I get hundreds of stories where they have, somebody who's just doing great outside of trading. Wonderful business person, successful like crazy everywhere else, but in trading, all they do is lose money. Well, it's because they're thinking, well, I've done well over here, so I'm just automatically going to be a good trader. No, it's recognizing, do I have the skills? Have I become the trader that I need to be? That's the mindset of a winner. And here's the other thing, like with a sim account. I've heard it tons of times. They'll say, yeah, I got into the sim account, and I kept practicing it until I got it right. Well, winners don't practice until they get it right, and then they stop. And this is true whether it's sports or trading or any other performance activity. They practice until they no longer get it wrong. Instead of, hey, I'm shooting free throws, and oh gosh, hey, I made one, cool, I got it. No, the winner stands there and they keep shooting free throws until they're hitting 9 out of 10. Then they call it good. And that's the same thing with trading. You want to get good to the point where you're going into it. Now, from a business perspective, you hear, treat your trading as a business, and it only makes sense. Trading is a business. It absolutely is. It's not investing. It's not buy and hold long-term investing. It's a business. It's a regular activity pursued for profit. It requires skill. It's exchanged. So all businesses have to deal with uncertainty. It doesn't matter if you've got a brick and mortar business. There are always variables beyond your control that that may affect your business. And it doesn't matter if you're a doctor, if you're, you got a restaurant, an accounting firm. It doesn't matter. You may have competition. Somebody may change the rules. Something may happen in the economy. You can have the competition come in. There can be innovations. There's always uncertainty. and even on a daily basis. You know, you may not have the customers show up today because somebody else is running a special on the other side of town. So anyway, all businesses have to deal with uncertainty. Trading is no different. Trading's not special because there's, you know, the uncertainty of the markets. And the other thing about uncertainty, the markets aren't random. They're not. If they were truly random, a chart would look like a scatter plot. It doesn't. There are lines. So there's wonderful order in the markets. And so that really is a reduction of the uncertainty. Anyway, so businesses in general have to deal with it. Anyway, from a business perspective, looking at trading and businesses in general, business investors tend to be very risk averse. And you're a business investor, the fact that you've invested in your own trading business, you're the business investor. Professional, like venture capitalists, angel investors, they want to know that they're going into the position, if they're going to invest in a company, they want to know that they're likely to win, so that they're going to get their money back, they're going to realize the ROI. And that only makes sense. And you should be, you would naturally be in the same position. If you're investing in somebody's business, you're going to be like, hey, tell me how it's going to work. Make sure that it's, you know, I want to know that it's going to work. And that's why a business plan is always insisted upon, regardless of how sophisticated a formula it is. You still want to have a plan in place where, yes, you're laying out how you're going to make it happen. Not, I'm going to buy a system and hope it makes me money. No, an actual plan. And if you look at the first section of a business plan, any formal business plan, for, like I said, in the regular business world, the first section is the executive summary, where you're talking about who's going to run the business, who's going to be running, you know, who's going to be starting it up and growing it to its mature form, and making sure that that's, you know, even though you might have a proper plan, you might have a good idea, you got to make sure that the people that are going to be doing things are the right people for the job, that are competent. And again, going back to the you know, independent trader, the winner's mindset is, I'm going to be who I need to be to make it work. So they know that if they're writing a business plan, when they fill out that first section, the executive summary, yeah, this person knows what they're doing. Cool. Okay. Now, from a quality perspective, again, I've been in quality assurance for over 20 years now, and I absolutely love it because in my mind, quality is good business by design. It's getting your operation and your processes under control to the point that you are assured of making quality products and services. Firefighting is a bad thing, and so in trading, we realize, yes, if you're fighting fires all the time, if you're constantly fixing mistakes, those inconsistencies are a bad thing. They're a direct cost, and this is a huge clue in the business world. And this is why quality is such a big deal, because yes, inconsistencies are a direct cost, and elimination and minimization of inconsistencies and variables is the goal, because when you get good and then you get consistent at what you're doing, you've eliminated, you know, like I said, you minimize the inconsistencies and the variables. This is the key to reliability and security in what you're doing and maximizing profits. I mean, seriously, this is like the key. When you get your everything under control, where you know what your outputs are, and you get consistent at it, and it's running reliably, and you know what's coming out the other end, that's when you're getting the most profits and the most peace of mind and security in what you got going on. And that's why I love quality, and that's what I've been able to bring to the traders of the world, is the things that I've learned in quality, because it goes beyond just saying, well, here's what you do, be disciplined about it. No. Quality brings all the tools, perspectives, and practices to make it happen, so that you facilitate consistency, you make it easy, and you make it a reliable thing. And that's what I bring to trading. So, quick recap. We looked at the top 5 mistakes, the mindset of a winner, business perspective, quality perspective. And so in conclusion, remember, trading is a mental profession. It doesn't matter what the markets do. If you've got control over yourself and what you're doing, you've got yourself properly prepared, you've acquired all the skills that you need, and you've developed those skills, you can go into the matter with a high level of confidence in what you're doing. I mean, from your overall strategy to your daily trading, your success is going to be determined by what you do and what you bring to it. It doesn't matter what the markets do. You can control yourself and what you do and who you are and the skills that you bring and the skill level that you bring. And if you'll focus on that and that's what you bring, that's how you're going to be successful. The main thing is you show up ready to win. You don't show up hoping to win. You position yourself so that you know you're going to win. And that's what's really cool. I mean, it doesn't happen through thinking. You can't will it. You can't affirm it in. You have to take action. Become the trader. You know, seek out the training that's going to make you that trader where, yeah, you're coming to it confident. You're bringing the skills. You're bringing the knowledge. You're bringing the hands-on success. And that's what's really cool. Best way to summarize it's called getting started. So I'll leave you with a short story. So only take a moment. I know we're running out of time. But anyway, my oldest son, Max, when he was 5, got him playing t-ball. And the coach of his team was hilarious. This guy, Tom, he was just an absolute baseball geek. I mean, he had played in college, went on to play minor league ball. But he just got amped about it. And his son was pretty good, the same age as Max, and Max was pretty good. And he just loved these two guys. He said he was watching them, and he's like, I'm going to have the first two to turn a double play in t-ball. You watch. We're going to make it happen. And so he would practice with the guys. Both of them could hit, I mean, they had all the skills. And he would just get amped up about it. Anyway, so the first time they turned a double play, Tom's just losing his mind. And I'm like, yeah. He's like, man, I just love it when these guys get stud. I'm like, what? What are you talking about? He said, look at them. They just turned that play, and look at how they're walking around. They know they're good now. He said, that's what it is, getting stud. That's when you get good and you know you're good. You don't have to be a jerk about it, but it's just you have that air about you. You know you're good. And that's what's really cool. You can do the same thing as a trader. Instead of going on anxiety and doubt and hope and fear of losing money and all the negative stuff, you can attend to yourself and get stud. Get to where when you come into your trading, you know you're good. You know you're going to make money. You know the odds are in your favor. Your confidence is at an 8 or a 9 or a 10. And that's really cool. That's one of the best things about it. And these psychological mistakes that I've been talking about and we've been covering here, that's really what, that's what it's about, is approaching it mentally so that you can do the things you need to do to become the trader you need to become. And so long as you're making the psychological mistakes, you're not even going to think to go these directions. Or like I said, if you've got a closed mind, it's going to prevent you from even considering these things. So anyway, your gift for attending. Again, it's the Trading Psychology's Missing Chapter, Enough to Be Dangerous. All you need to do is go to InsideOutTrading.com /9 December 17. And 3 things to do when you get there. Download the report. There's no opt-in, so you're not getting on an email list. If you just want to go and download it, feel free. If you would, share it with your friends. Again, it's free, it's helpful. And again, it's Psychology's Missing Chapter. There's stuff in there that isn't talked about in the other trading psychology books. And there's also a free training class on consistency that you can register for and attend. That again will only help you with your trading. It's free. And I keep my my classes, my trainings fairly short, so it's not going to be 2 or 3 hours, but we'll cover a lot of ground. It will help you a lot as far as understanding how to apply consistency. This one in particular is about the science of consistency. So, and let's go ahead and open it up. Let me see what kind of questions we've got here. Okay. So. Well, anybody have any questions? I've got some comments. I'm not seeing any questions. And if we're running out of time, then that's fine. If you have any questions, go ahead and fire them in. Otherwise, I'm going to go ahead and wrap things up here and let the next presenter get on. I appreciate you taking the time for this. I hope it's been helpful. Again, do feel free to swing by my site, InsideOutTrading.com. I have lots of free resources for you available there. You can check out my blog. I've got free trainings, free reports, quizzes, tools. So, and of course, I do have paid training. If you really want to get serious about it, you want to get more involved with the work that I do. If you like the business perspective of trading, you want to take advantage of all that I learned in quality to help you really get your trading dialed in and get your confidence way up there, get your consistency, at its peak. These are my areas of expertise and my strengths. So, and I've been doing this for 11 years. I've helped hundreds of traders. One-on-one, thousands of traders with my courses, and this stuff is just effective. I mean, I take a competence-based approach to trading. I've learned a long time ago that, yes, if you have what it takes personally, the biggest problem that most traders have are not psychological issues, they're training issues. When you get the right training and you have a solid handle on what you're doing and you can build the confidence and build the success, that, yeah, you'll be fine, and it doesn't have to take years. This is something where it really should only take weeks. Literally weeks, maybe a couple of months. A lot of people ask me, Brian, how long should it take, where I can get to be, a competent trader? Weeks, months, not years. And you can take as long as it needs. Since there's no hurry. If you want to, take a break and things, life happens, the holidays, whatever, you can do that and come right back to it. But do it without losing money. That's the main thing. You don't have to lose money in order to, go through the development process of being a trader. That's one of the biggest things. There's no rule that says you have to be risking real money if your confidence isn't there in what you're doing. If you don't already know that you're good to go, you don't have to be risking real money. So anyway, let's go and wrap things up. I'm looking at the time. My clock's showing 1:02. It might be just a hair off. But anyway, let's see. Yep. Time for me to be jumping off of here. Let's see where the next presenter is.